Make sure you hit that Control Save key button every once in a while, maybe after every transaction. It's up to you. But I would definitely let you know, try to do as frequent as possible, whether you're in class or not, okay? So once again, we left off by completing our journal here. So we are done with our journal. Our numbers match, okay? We have 84 plus 87, right? 4 plus 7 is 11. Carry the 1 over, that gives you 17, all right? So therefore, now my numbers have matched. Now I'm going to go ahead and place this into my ledger, okay? So once again, ledger, right? I've already finished updating my check register. So let's go to my ledger, okay? First thing I have here is a computer, okay? Even though I'm already on check-in, I want you to train yourself. Don't jump over accounts, okay? You utilize your journal as your place marker or your checking to make sure that you properly journalize everything or post it to the ledger properly, okay? So here I'm going to go straight to my computer, right? It's under office equipment. Okay, so that should be somewhere in the middle of the assets. Okay, here is miscellaneous. That's okay, I went a little too far. Okay, here we are. Computer. Okay, once again, I'm going to go ahead and indicate that it is now the 5th. Again, you could choose to purchase a computer, but once again, I'm acquiring it, so it's kind of redundant if I say I'm increasing a computer, which makes sense because, hello, you're increasing the assets of the computer. So in this case, I don't need to put anything in here, no sales receipt number or anything like that because I acquired an asset, right? And I'm going to say, yeah. It's up to you if you want to say you purchased it. You can. If not, you can leave it blank. But I'll do it for you guys, okay? I'm going to say I purchased it, okay? All right, post reference once again, general journal number 1. And this time we are increasing it by the 1834.84. Okay? And because this is our beginning balance, right? I'm going to reflect it as my debit balance in my computer account. Okay? There it is. All right. Now I'm going to scroll maybe one more account down and I can see that here's my printer. So already I'm going to indicate the date. I'm going to indicate that I purchased it, of course. Straightforward. General Journal 1 once again, and this time I'm going to debit it for the 378.87, right? 378.87. All right. And I'm also going to indicate here that my debit once again is the 387.87 because 37887 because that's my beginning balance, right? Don't need to format it. It's already looking good, right? And of course, last but not least, we also have to update our checking account. So because we just made another, we wrote out another check, let's determine how much money we actually have left now. And in this case, usually this one, they run the check immediately, right at the register. So therefore, this amount is taken away automatically. So again, 65. You can choose what you want to write here. Once again, I'm going to just write my check number because that's pretty much going to tell me all I need to know, right? That I bought something from Computers R Us. Pretty straightforward. Computers R Us. So I must have bought a computer. Once again, General Journal number 1. You can copy it from above. Usually I have the fill-in tool, so I'm already going to use that as is, okay? And once again, on my journal, I'm showing that I have a credit of 2213.71. And once again, if I have my formula in there, the minute I press that enter, it's going to automatically calculate. And now I am down to $13,911.29. Okay. So there you go. I have it. I've updated my ledger. So now the last thing I need to do is update my subsidiary ledger. Okay. So I'll give you guys a second to catch up here. So I entered in all of my accounts in the exact order, just so that I don't accidentally forget to add or post to the ledger in a specific account. Okay. So now I'm going to go to my subsidiary ledger. Once again, it's in alphabetical order, so I just have to locate my vendors under C. Okay, so I have city printers. Okay, well, obviously it's alphabetical order. So computers are us. It should be under city printers. Again, the date that we purchased this was June 5th. This is where you can maximize whatever notes that you want to say. So I could say I bought a computer and printer. Okay. And I can even enter in that I paid using check number 1502. Okay. The vendor's name's already there, so you don't need to add any information there. Your invoice number, right? We weren't billed anything, but we were given one thing. We were given a sales receipt number. So in this case, that's exactly where you're going to place it here. So I believe it was 183. I don't even remember. 84. Okay. 84134. Okay. Oh, 43. Thank you. I heard that. I just didn't register it. So once again, it's important that you have this, because the one thing that you need to know is to have with this is in case you decide to make a refund or a return. Post reference, once again, you did this transaction as of the journal number 1. Okay? Now, of course, we purchased this from in-store. You're never going to you will never be given a terms when you buy things in-store. So this part you can ignore. These next 3 parts. Same thing with your due date. You don't get a due date if you purchased it in-store, right? Because you purchased the day of. However, you can't make any prepaid as well, right? Usually that comes when you call in and get a quote and you say, here's my advance payment. In this case, you walked into the store, you saw what you like, you purchased it, so there is no room for prepaid amounts, okay? However, your receipt reflects an amount, and that was for the $2,213.71, okay? Now here, this column is only used for, let's say, a couple days later, we plugged it into the wall, we set it up, we set the operating system up, and for some reason, it crashes every 5 minutes, or for some reason the plug that you plugged in, it's loose, or there's something wrong with it, it won't turn on. Then that's where you can go ahead and use this returns and allowances, because if you purchased it in store, usually written on the receipt, allows you a specific time period where you can make returns or exchanges of items. Okay, maybe you bought it expensive and you want to return it so you can get a better discount on it, right? People do that, okay? But once again, this square is only reserved for in case you need to make a return. So once again, once you purchase the asset, right? Your first thing that you should do is plug it into the wall just to make sure it works or it can turn on. All right. From there, you can set up your operating system, set up your account, set up whatever you have, QuickBooks, whatever, set up your printer, whatever it is that you need to do to get it ready for service. But at that time and moment, you should check to make sure it works. Okay. Especially you don't want to wait till the very end when you actually start opening your business to plug it in. Right? That's a no bueno. Okay. Discounts, again, you purchase at time of the sale, right? You purchased it that day, so therefore there is no discount that you can claim. And of course, did you pay for it? Yes, you did. You paid using check number 1502, so therefore I paid it in full for the 2213.71. And once again, formula is going to be your invoice amount, subtract any prepaid, subtract any returns, subtract any discounts, subtract any payments. So therefore, you owe Computers R Us nothing, right? You paid the whole bill in advance. Okay. So, yes. And that concludes our transaction. Right. So you're going to take your invoice amount, subtract your prepaid, subtract your returns, subtract your discounts, subtract your payments. Okay.
So the payment was the 2213.
Mm-hmm.
Okay, and then the accounts payable is the invoice amount minus prepaid minus return or minus a discount.
Mm-hmm. And also the payment.
Okay, got it.
Okay, so you should reflect that your accounts payable, right? The amount that you owe to a vendor is nothing because you paid at time of purchase. Okay? Right? All right, excellent. So that's how we deal with keeping track of our vendors and as well as keeping track of our purchases, right? We acquired some assets, okay, and we properly managed to determine how much tax belongs to each one and so on and so forth, okay? So now we have completed our transaction. So what you're going to do with this receipt is hold on to it just in case for that reason. So again, you could create a folder for all your receipts, okay? Whatever it is, make sure you hold on to them, okay? So then on the same day, we decided that we need to pay for some insurance for the business itself. Okay, so with that being said, we need to buy some protection, okay, for our company, right? Especially if our store gets broken into, we should definitely have some kind of insurance to protect our location. All right, so that's why we decided to look into some liability insurances. Okay, so this one could be either protection for the company, protection against fraud, protection against stolen items, whatever it is. This is the liability insurance, okay? And here we decided that we look into a 12-month plan. So when you do with insurances, you're most likely going to be looking at a year-long plan or 12-month plan, 6-month plan, or a monthly plan. Most cases, you're better off with buying a long-term plan versus short-term. You don't want to do a monthly plan just because, especially if you're expecting to do business for a long time, you shouldn't have to make monthly payments, right? You have to be for sure that you're going to be running your business. So usually the options is the most that you can do is 1 month, 6 months, or even a whole year. I don't think you could do more than a year. Usually you have to renew your insurance, right? And they'll usually tack on more things that you have to pay. But for this case, we're getting it from Sargent Insurance, okay? And let's take a look here. They offer us a 12-month insurance plan that's going to be effective as of June 5th of 2020. So therefore, it's going to be effective immediately because that's what usually insurance do. It's effective immediate upon purchase. Okay. So therefore, in the amount of $2,350 for the overall liability insurance, okay? And again, we're going to write another check payable to Sargent Insurance Company. So let's take a look at this. What are we doing here? So it's similar to the rent expense, but however, what are we taking a look at? Let's take a look at our chart of accounts. What are we doing?
Insurance expense.
Insurance expense is definitely one of them, right? Because if it's effective as of June, therefore, we need to expense the first month. Okay? What about the 11th months?
Prepaid.
It's going to be considered another prepaid insurance because, hello, you're paying for a full year's worth of insurance. So therefore, by acquiring a prepaid account, therefore, the insurance company is obligated to serve you for insurance and cover you for those remaining months. Okay? And lastly, we issued a check, so therefore, I have to write a check. So, once again, let's go ahead and journalize this. It is now the same day, June 5th. Okay? We recognize that we are making a payment of insurance expense, right? We have to cover for this month's insurance. Okay? And then, of course, we have prepaid accounts because, right, we're still covered for, we already made an advance payment for the 11 months remaining. And then last but not least, we wrote a check. Okay? So again, what's my insurance expense account?
60400.
Okay. Prepaid accounts, right? You can look right above, right? Because we did use that account before. So that should be 18,600. And then, of course, what's my checking number?
100.
10,100. So here's the one thing that we know. We know that we wrote one check for $2,350. Okay? That was what the check amount was for. Now, how do I determine how much is each insurance for each month? Or per month, let's say.
Divide that amount by the 12 months.
Correct. And in this case, I'm going to give you a hint. You will get an odd number. So do your equal round. 195.83 is correct. So equal round, right? We're going to take my 2,350 divided by 12 months to give me that my month expense is going to be for the month of June is $193.83. That's 1 month's worth. So therefore, how can I determine my 11 months remaining? Pretty straightforward.
583 times 11.
You could do that, or you can just simply subtract them. Yep. So that means, therefore, I have remaining $2,154.17 left of insurance for the remaining 11 months of the year. Okay. All right.
Can you let me grab those formulas real quick? Hold on 1 second.
You have to subtract them because if you took 11 times that amount, you come up with a different figure.
Correct. Okay. Which one? Which?
195.83 was for the 1 month for the insurance expense, and then the prepaid was the 2350 minus the 195.
Hold on. I just messed up my formula. So let me Control Z. Okay, I'm just going to erase this whole thing. Say that again. So, yes. So this one we saw for what each month is going expense is going to be, right? You bought a whole insurance for 12 months, right? How much is it going to cost you per month? In this case, 195.83. Now, in this case, like Melinda just said, right, it's because you're just doing a rough estimate, right? It's not an accurate number because you're dividing this odd number or this even number by the total amount of months, right? Therefore, this is just a rough estimate of how much per month you should pay. Now, of course, the best way to do this here is to solve for it is just to subtract it out, right? Subtract out your 1 month's worth. Okay, I thought I heard somebody. Okay. So, actually, so in this case, right, I'm left with $2,154.17 because that I've already taken 1 month out. Okay. 1 month worth out from my insurance expense. So therefore, I have a remainder of $2,154.17. So once again, this is where you have to make an adjustment every month because as you move further down into this, you have to accrue for each expense because you've already paid for it in advance. So therefore, every month that you do use it, you're gonna have to make the adjustment there. What was your question again, Nicole? I'm so sorry.
No, you're good. I already figured it out.
Okay.
I was trying to get the equation.
Okay. So once again, let's go ahead and figure out what check number we used by going to the check register. So as I can identify, we're going to be using check number 1503 in the amount of $2,350 to Sargent Insurance Company. Co for short, right? Once again, your checkbook and your check register will obviously look different because your checkbook is what you're going to cut the check for, while this is just your notes, okay? This is so then you can keep a record of your check, the checks that you've written out, who you wrote it out to. So if you want to use abbreviations, you can do so as long as you're able to decipher and recognize that you made a payment to this person, okay? So there you go, Sargent Insurance Company, and I'm using check number 1503. So back to my journal once again. Now I have the full information, right? Who was my vendor? It was Sargent Insurance Company, okay? Here you can write 12 months liability insurance, whatever you'd like. In this case, if I'm buying something from an insurance company, it's kind of straightforward. You're buying insurance, so I'm not going to write that in there. Usually you would have a bill number or a contract number, invoice number, whatever it is. In this case, I didn't have one. That's okay. We're not going to visit this again. But general rule of thumb, you should have some kind of contract number in case for any reason you need to back out or close out your insurance, then you need that for that purpose, okay? And of course, I'm going to indicate what check number I wrote because that's how I keep track of this transaction, is that I'm validating that this transaction went through because I paid using a check number, okay? Check number 1503, okay? All right. So now that we finally completed our journal, what's the next step? Okay. Next step is to post it
To the
ledger.
the general ledger. The ledger. Okay, you can do checking first, but remember, if you skip around, and if you're good at this, make sure you keep track of it, because if you skip around and you forget to do prepaid insurance, that's where you'll find your holes in your books. But if you are really good at this and you're keeping really good track of it, go ahead and do it. But as my best recommendation, as a beginner user of this, this is not the only account that we're going to be dealing with. The maximum that we'll have is maybe 7 accounts in one transaction. Okay. And if that's the case, you definitely don't want to skip around because you want to make sure that you enter everything one at a time. Okay. So first things first is insurance expense. Okay. So insurance expense, right? The expenses are in alphabetical order. So if I'm using my Excel sheet, the great thing about it, it leaves off of exactly where you last enter something. So I'm in my rent expense. I can just scroll up and find, oh, here it is, insurance expense. Okay. And I can indicate the date, and I'm going to go ahead and say insurance for June. Okay. Post reference General Journal 1, and once again, it's for $195.83. And again, because this is your very first entry in here, your beginning balance is going to reflect the same on the debit side. Okay. Now that we have our insurance expense in here, we don't need to write our formula in just yet because this is only the first entry that we've done. So we can go ahead and move on to the next account, which is our prepaid accounts. Okay. Now here, the last that we left off is our checking account. So it's up to you if you want to fill in the checking now. Like I've mentioned before, I don't want to make any extra mistakes, so I'm going to go exactly how the how my journal looks like. So I'm going to go drop down all the way to my prepaid accounts. Oops, I skipped too far. Here I am, prepaid accounts. What am I going to make a note here? All right, 6.5. I can say advanced payment for 11 months of insurance. Okay, and then I could say it's going to cost me $195.83 per month. Okay. Right. Once again, General Journal number 1. And this time, I'm going to be adding my 21.54.17. Okay. So this is where we're making a second entry in our general ledger. So therefore, we need to enter in the formula so we can create our running balance. Okay. So here, once again, the formula is going to be up 1 plus left 2 minus left 1. Okay. Also known as up 1, which is your previous balance, add any debits, subtract any credits from the same exact row. And you should get a grand total of $6,654.17. All right? And once again, if you have the formula in here, you can go ahead and drag it down to the very bottom of the window because as you can see, we're going to be dealing with a little more prepaid insurance or prepaid accounts, okay? So as a heads up, so go ahead and enter in that formula and pull it all the way down to the bottom of the window. Not to the gray part, but to the very bottom, okay? All right. So once again, up 1 plus left 2 minus left 1, okay? Or also known as previous balance plus my debits minus my credits, okay? To equal 6,654.17, right? Now that I have that, once again, I'm going to go all the way to the very top because the last account that I have in my journal is my checking account. So this should be on page 1 of the Word document, okay? And we're going to enter the date. And once again, my only information I'm going to place here is my check number 1503. Because I can look that up in the check register and know exactly what the transaction is. And now I gotta take a look. How much was my check written out for? $2,350. And if I have my formula intact, it should automatically update, and now I am down to $11,561.29. Okay. So far, so good.
I'm good.
Melinda, are you good? Edward? Felipe?
Yes,
I'm good.
Okay. All right. So now that we have this part, we now need to post to our subsidiary ledger. Okay. Subsidiary ledger. Okay, so once again, Sergeant Insurance Company is going to be a vendor because once again, you can use it to revoke your insurance at any given time. So same concept here, right? No, we haven't encountered a vendor that's going to give us a discount, especially for an insurance company. They are definitely not going to give you a discount on anything. Okay, you see what you get, you pay for it. All right, so Sergeant Insurance should be here. Date is 6/5. Once again, 12-month insurance plan. Insurance plan, whatever you want to call it, insurance. Again, invoice number, I did not put one in there just because you're not going to visit this again. However, post reference, right? We still are on our very first journal page. Again, an insurance company's not going to give you terms, so you can skip that part. You can't buy insurance way in advance before at time of purchase, right? So in that case, the prepaid is not going to make any sense. However, your invoice amount, because you made the 12-month payment, the receipt on there was for $2,350. Okay? And once again, we did make a payment, right? We made the full payment using check number 1503. So I'm going to enter that in as my notes as well. So I used check number 1503. Okay. And so that guarantees I made a payment, right? Proof that I made a payment for the $2,350. Okay. And once again, I'm going to format these so then they look a little nicer. Okay. So once again, your formula is going to be your invoice amount, subtract any prepaid, subtract any returns, subtract any discounts, subtract any payments. So therefore, you owe Sergeant Insurance nothing. Okay, $0. Okay. And yes, you will get a bill from your insurance company every month, letting you know that this is your expense for the month, right? What other services that you offer, right? Whatever happened to your company between the then and if your insurance covers it or not. Okay. So there it is. Okay. Right. So once again, we completed our journal. We posted to the ledger and we updated the subsidiary ledger. All right. Everyone good so far? So now we have completed our transaction and we are done with the day. Okay. We updated our check register, so that's good to go. So let's see what has happened on Thursday, June 6th. What did we do here?
Applying for a business credit card from National Bank.
Okay.
So we
So-
can't do nothing because it doesn't have any additional.
Good. And we just applied for it. We don't know if we got approved. We don't know how much we got approved for. Okay. We don't know what the terms are. We don't know what the interest percentage is. Right? We just simply applied. So therefore, no transaction is necessary. However, it's definitely something you need to keep in mind. Okay. So then we came across here. The Maine Bank of Nevada approves your line of credit for $10,000. Awesome. Okay. Now this line of credit, okay, gives you this is to be only applied, okay, as an overdraft protection plan and for personal loans to be in increments of $1,000 per, that you take out. Okay. So again, the terms here is that your interest rate is going to be 22% applied to any unpaid balances. Okay. And then once again, it's going to be compounded daily. So any day that you do not pay, if you do overdraft your bank account, you will be charged. That 22%, obviously it's an annual rate, so you're going to be charged whatever it is divided by whatever it is, right? Upon each day. Okay. So with that being said, all right, can we journalize this transaction?
No, because we're not purchasing anything. We got approved for it, but there's no transaction of us spending any money or depositing it anywhere.
Okay, so purchasing, depositing. Okay, we do have interest, okay. So, Nicole, your answer is correct, but your reasoning behind it is not. Okay, so yes, we do not have to journalize this because there's no proof of a transaction. That's correct. What is the catch that you have to have in order for you to get charged or for the line of credit to be take place? What's the condition?
You'd have to spend some of it?
Not spend some of it.
You overdraft.
The line of credit is only there for two things. If you overdraft your bank or if you decide to take a personal loan. So in this case, I have a condition that I must meet. So, okay, so I guess Nicole, you're kind of half right because you didn't spend anything. That's correct. But the idea is that you didn't spend over the amount that you have in your bank account because this can only apply if you overdraft your bank. So right now we have $11,000. If you make a purchase for $12,000, you will automatically get charged the interest because you overdrafted your bank. So in this concept, can we journalize this transaction? No. No, not yet because we didn't meet the condition. Okay? So therefore, so we do get approved for the line of credit, but again, the only use for this credit is if we overdraft our bank account. So in this case, that means the bank, if you write a bunch of NSF checks, obviously you get charged for the NSF, but the conclusion here is the bank will press forward and pay for that charge for you. But they'll obviously have they'll charge you for the NSF, but they'll pay for you in advance. So in this case, that's what the line of credit does for you. It's in case you don't have enough money in your bank account, it will pay for you. So, the check doesn't bounce. Okay? So in this case, where can you place this piece of information? Now that we have this conclusion, right? We have a line of credit for $10,000. where can we actually place this information?
Assets.
Not your assets. Okay, this is a concept that we learned in chapter 4.
You said chapter 4:4?
Chapter 4. Okay, I'll give you another hint. It's a rule under Gap. It's a rule under Gap. Even more specifically, it's a basic principle. Adequate disclosure, correct. So there is a place that you can put it. Again, this is more advanced level of accounting. So right now, that's not something I want you to focus on. But I do want you to know that for something like this, if it's a transaction that can affect your business in any way. So in this case, the conclusion is if in case you do overdraft your bank account, you're going to be subject to a 22% interest compounded daily. So that means every day that you have overdrafted, they will charge you the interest over and over and over again based on every single day. So in this case, right, that's definitely pertinent information that you want to place in the notes to the financial statements. Once again, that's advanced level of accounting because you have the scenario. You can always look for this transaction, but as a general rule of thumb, this is going to be something that you place into the notes to the financial statement when you do your financial statement reports, okay? Now, you can put it into the subsidiary ledger if you'd like. It's not obligated because technically you're not receiving a bill for anything. You're just receiving information. No transaction has been valid, right? The only way that you'd be able to tell if you do have this is through your bank statement, of course. So in this case, it's definitely something that you're going to make note into your notes to this financial statement. However, you have the scenario, so I'm not going to require you to keep it. However, that's definitely something that you want to keep in mind, that you do have $10,000 worth of money to protect the bank account, and it's from the main bank of Nevada. Okay. So then let's see what happened next. Okay. So no transaction necessary. Okay. So now the accountant creates a new ledger account, loss on disposal of asset, right? It's an expense account, okay? And let's take a look at this. It's account number 6700, okay? And now we tell you that you're going to move $2,000 from the miscellaneous suspense account and you're going to drop that $2,000 into that new account. Okay? So, how do I journalize this? How do I remove from one account to another?
You have to create the new account first.
Well, let's take a look. Let's take a look at our chart of accounts.
What was it?
6,700.
Mm-hmm.
We have a 6,700 loss on disposal of asset already.
Yes, like I said, I'm not going to have you create any accounts. I already created the account for you. So in this case, me, the accountant, has already created this account for you. It's account number 6700. And the account is loss on disposal of asset, which is the exact account right there. Loss on disposal of asset. Okay? So there you go. I created the account for you. Now, what did I ask you to do?
Move the 2,000 from the miscellaneous expense to the new account.
So, well, how are we going to do that?
First
The
go to
journal?
miscellaneous expense.
Hold on. What was that? You're going to do what? Melinda?
Oh, first we have to go to the miscellaneous expense and move the 2,000.
Okay, so let's take a look at our ledger. Let's go to the miscellaneous expense. Okay, so right now, let's see. We're going to go all the way down. I believe that's page 16 or 17. So here, there it is, my $2,000. How am I going to move it?
Credit it.
We're going to credit the account. Excellent. Okay. Now, if this is going to be a credit, then therefore, what's my debit account going to be?
It's going to be the loss on disposal asset.
Correct. So again, loss on disposal of asset, okay, is what we're going to recognize because that's our debit. The rule is debits first for the account 6,700. And again, we're going to be crediting the account from our miscellaneous expense, okay? Miscellaneous suspense, which is account number 19,990. Okay, and we're moving the $2,000 from account A to account B. All right, from old account to new account. All right, and once again, this one pretty straightforward. You could go ahead and just write here. You're just gonna move from moved to another account or to lost to new account, whatever you want to say. Okay. All right. Now this is going to be an internal journal. Does this relate to any customer, vendor, or employee? No. So therefore, do we need to use a subsidiary ledger? No. In this case, we do definitely have to post it to our ledger, right? So now that my journal has been completed, let's go ahead and change. Let's go ahead and move from my miscellaneous to my new account. So in this case, this is going to be where I'll let you do this since we're already on the miscellaneous. Let's go ahead and physically take it out and remove it. So once again, it is now June 6th. And I'm going to move loss on sale of furniture to new account. Okay. Again, this was on journal number 1. Okay, because we're still on journal number 1. And because we decided to credit the account, right? We're taking it out, we're removing it. So this is where we come up with the idea of a balance. I currently have a $2,000 balance. How do I move or remove that $2,000? By crediting it. Okay? So this is where the idea of increasing and decreasing comes into play, right? Right now, I currently have a debit balance. How do I decrease my miscellaneous expense? I decrease it by using a credit. Okay? And of course, by entering that formula, right? Up 1, left plus left 2 minus left 1. So, or, previous plus any debit minus any credit. I have currently a 0 balance. Okay? And again, As you can see, we're going to be dealing with miscellaneous expense a lot in this account. So go ahead and apply that formula all the way down. Okay. So here,
That formula again?
it's going to be up 1.
That whole up one stuff confuses me. So it's the debit balance before plus the balance minus the credit.
Yes. Okay, so think of it this way, right? My current balance is 2,000. Okay. If I have a debit, I'm going to increase my balance. If I have a credit, I'm going to decrease my balance. So in this case, am I increasing or decreasing my account? I'm decreasing it by how much? If I started with 2,000 and I'm subtracting 2,000, my end result is what? 0. And that's all that it is, right? It's the idea of I have a current balance or I have a beginning balance, whatever it is, right? If I have a debit, I'm going to increase it, so I'm going to add to it. If I have a credit, it's going to decrease it. So that's exactly what that portion is. Okay, I'm just adding.
Question.
Go ahead.
On my Excel spreadsheet, like on H555, there's like a whole little section of numbers. Is that for anything particular?
We'll talk about that later because this is going to be something that we're going to be taking a look at later on. Okay, this I just left it there because once again, it's okay, going to be your scratch paper. Yeah.
Okay, I just wanted to make sure I didn't put it in there somehow, some way.
No. It's there because when we move on to a specific section, you're going to be using this section right here. Okay. So there you go. There you have it. You have a beginning balance of 2,000. You're subtracting out 2,000, so therefore you're moving it out, and that's what exactly I am indicating right here. So now I gotta locate my expense account because once again, a loss on disposal of asset is an expense account, right? Because I have to expense my loss. I gotta get rid of my loss, take my loss. Okay, so I go into my expenses. It's just on page 34. Once again, it's in order by the account name. So I'm under insurance expense. So I just move down a couple, and there I have it, loss on disposal of assets. Once again, I'm going to indicate the date. And this time, instead of saying moving it into here, I can just say this was the loss I incurred on sale, loss on sale of furniture. Okay. General Journal 1, once again, I am debiting my account for the 2,000. So therefore, my beginning balance in my account is a debit balance for $2,000. Okay. And once again, this is an internal transaction, right? I'm moving it within the company. Doesn't have to do with any person. So therefore, I am done with this transaction. Okay. Everyone good so far?
Yes.
Okay. Let's see. I think we have time for one more transaction. Okay, because it's already 4:30. So let's take a look at this. We get to make our very first purchase order. Okay, and then we'll continue the rest tomorrow. So let's go ahead. We're going to make our very first purchase order. So let's take a look at what this purchase order entails. Who are we making this purchase order to? Furniture store. What are we buying?
Desk.
Okay, awesome. So here, maybe we went on the website. Okay, we found that this is what it's marketed at. Okay, so I'm going to go ahead and send a request to my purchase order. Now, question to you. Can I journalize this transaction? No, why?
It doesn't say how we purchased it, how we paid for it.
Okay, good. It doesn't say.
We're gonna pay for it later because we purchased the order and we haven't got a bill.
Correct. Felipe, you're correct. And good job, Nicole. That's right. You don't need to post this transaction because all you're doing is you're just sending a request. They didn't ship you the asset yet. You didn't receive a bill, nor did you pay for it. So this number right here is your estimated number or your quote, right? Because that's what it says on the website or wherever you found it in order for you to send in a purchase order. We don't know if there's going to be tax charged. We don't know if there's going to be shipping costs. We don't know anything. All we know is that's the price that it's market on the website or wherever we found it from. And we're sending in an order for this particular item. So, therefore, we don't need to journalize it. However, we do have a little sheet for us to keep track of our purchase orders, okay? So let's go ahead and take a look at that. It's going to be your POs, which is your purchase orders, okay? It has to be some kind of requirement, okay, for anybody. If you're going to be sending in requests for all these things and you don't keep track of it, and one day you're so busy doing your work and you have a bunch of, people coming to your store saying, hey, sign for this, you purchased this. And then you're like, wait, I didn't purchase this. Look in your books and then, oh, I did purchase this. I guess I have to sign and pay for it. So it is very rule of thumb, especially if you're not the one that's making the purchase one. If someone else is making the purchase because they requested it, obviously, right? Therefore, someone has to approve those purchase orders, or when you send it in, you need to make some kind of documentation that you sent in an order. Another thing, too, is if you send in an order, that's also how you can keep track of, is my items coming in or not? So, it's also one of those things, too, that if you're going to submit an order, you need to make sure it arrives to your store. Because if it doesn't, then you can call the vendor and say, hey, did you receive my purchase order? I ordered this. Why isn't it coming? You sent me a confirmation email. Why haven't you shipped it out yet? Etc., etc. So once again, I think this is a very, very good idea to have, and make sure that you keep track of your orders, especially because this could be used for anything. Purchases of fixed assets, purchases of inventory, okay? Anything you can use the purchase order for is fair game, right? As long as you submit the order in and you're requesting to purchase an item. So in this case, I'm trying to purchase a fixed asset here. I'm trying to purchase a desk because I needed to put my computer on it. I can't just use whatever I have there. I'm not going to use the floor. I need a proper desk. So in this case, I called up furniture store, said, hey, I'm going to send in a purchase order. What's your information? So I can send you a proper purchase order, and I want it to be shipped to me. Okay. So then, here we go. Purchase order number 17301. Very first one. When's the date that you decide to purchase this? We submitted this as of the June. Yes. Okay. Again, who's the vendor that we're reaching out to? We're trying to make a purchase from furniture store. Okay.
One desk set.
Yes. Item. Desk set. Okay.
Estimated amount 562.
Okay. Now we have one more column.
No invoice number at this time because you put in the request, but the purchase wasn't made.
Correct. So we're gonna every time you receive your items, this is where you gotta come and verify. Is this the correct item? Is this the purchase order that you're matching it with? Because again, when we take a look at inventory, right? You can make multiple purchase of inventory, right? Especially if your business is booming, right? You're gonna be sending purchase orders left and right. And then you're gonna get a whole bunch of things come at you at once. So it's very good that you know exactly what you're receiving, how much you paid for, and which bill goes with which purchase order. So that's also one of the things that you're gonna need to make sure is once you receive those items, you need to make sure you're gonna match the purchase order, because again, someone in your company could be ordering a bunch of things and it comes in and you're like, I didn't order this, and then you can verify in your purchase orders that you truly didn't order it. So that is going to be saved for when you receive the items. You're going to match it against your purchase order, and that's it. So there you go. No transaction necessary because we haven't received the bill. And that is it. Okay. So what a purchase order is going to be called is a non-posting transaction, because it is something that helps you create your transaction, but it isn't something that you post. Okay. Hence the word non-posting transaction. Okay. All right. So, let's see. Let me take a look real quick. Okay, I guess you could do the second purchase order here that we did again. So here we have another purchase order that we made again to furniture store. So maybe we decided to read the pamphlet, and then all of a sudden, wait, we decided, oh man, we already submitted our first purchase order. Okay, that's okay. Let's just send them a new purchase order for more items. So in this case, what is my second purchase order? Mm-hmm.
Purchase order number 170302
Okay, so I've already had my purchase order slips ready. Go ahead.
for the counter and the shelves.
Yes, so where you decided, okay, well, we definitely need a counter for our register or to do our sales, and we definitely need some display shelves, you know, for maybe to sell our inventory. I don't know. Okay? We need shelves. Okay? And for what is my total purchase order amount?
1543.
1543. So that's my grand total there. Okay?
Quick question.
Yes.
Okay, on items, I put one counter at $1,033 and 5 shelves at 102. Can we do that, or do we just leave it like counter and shelves?
You do whatever you please, because in this case, the more descriptive you are, the better your accounting will be. In this case, I'll let you know this. You're not going to buy any more counters or display shelves. So in this case, my only piece of information is I'm buying a shelf and a counter. That's all I need to look for is, did I receive a counter and did I receive shelves? In this case, I know that I will be receiving that. But in this case, if you are going to do that, I would recommend you to go ahead and do that. That works just as fine. Okay? Right? That way you can guarantee exactly, did you get the exact number of shelves? Okay? So, good. All right. Any questions here? So, again, it is almost 4:40 right now. I'm gonna go ahead and call time. So, because the next transaction is gonna take a while to go through. So I don't want to go over time. So we'll just save this for tomorrow. So if you are using this, highlight it so you know where we left off. That's what I usually do for the class. So the next time we come back to it, we know exactly where we left off. So in this case, there we have it. The next transaction is going to be this one. So from here on out, save all your work, and we'll visit Coffee Cafe again tomorrow. Okay?